My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make a little money. My job's not just to entertain, but to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. When I first started doing this show, there were tons of people speculating that I keel over on air within months. Just too high energy. Sorry to disappoint. But man, if I were betting against my own longevity, you know what? There are 4 weeks of the year where I would put my money on. And those are the 4 hardest weeks of earnings season, when we hear from nearly all the big cap tech companies, like next week. Today gave us a clue of how the market might react, with the Dow advancing 29 points, S&P gaining 0.25%, but the tech-heavy NASDAQ jumping 0.95%. Driven by an immense and frankly bizarre amount of short covering. Traders who bought stock to close out their bets on once high-flying stocks, lest they be crushed. This time, Wall Street reacted positively to the companies that reported excellent earnings, rather than freaking out over some strong macro data, as they call it, this morning. That suggests the economy might be too hot. We do have a Fed meeting next Wednesday, but in a bold change of thought, this market's now reacting more to individual companies than to Fed speculation, in part because they believe the Fed might be done with gigantic rate hikes and will become less intrusive when we try to pick stocks. Wouldn't that be fabulous? So let's drill down to the game plan for next week to find out what is going on. All right, now Monday, placidity reigns. That's right. Monday begins benignly enough with Whirlpool and NXP. That's the semiconductor company. After the close, I think Whirlpool will talk about supply constraints running their course, but we'll also probably hear about a more frugal consumer slowing housing. Suboptimal. NXP, company makes chips for the auto industry. Today, one-time semiconductor kingpin Intel reported horrendous earnings. Normally, that would have brought down the entire group, including this one. But money managers are getting wise to that action, so they use the weakness to buy the stock of NXP, which closed up about $1.50. I bet that bullishness continues. Tuesday begins the nightmare. The severe overload of earnings that will cause cross currents galore. I dread it. I kind of want to rent a room next to the New York Stock Exchange, where we are right now, lest I be distracted by anything, including my wife or kids. I'm not saying these companies are trying to work me to death, but would it kill them just to space them out a little wee bit? Then first is Caterpillar. Now, this giant machinery company, the newest position of our charitable trust, by the way, should be able to tell a story of infrastructure spending galore, just like steelmaker Nucor did on our show last night. I think Cat will have a great quarter. In the old days, nobody would have been willing to touch Cat at this point, because the Fed meets next Wednesday, and they're going to be raising rates. But in this market, if Cat tells a good story, people buy it nonetheless. Exxon reports, too. Today, the market hated Chevron's disappointment. I think Exxon's got a decent story to tell, but not as good as Chevron's story. By the way, Chevron should never have been hit so hard. And as I told members of the investing club at our morning meeting at 10:20 a.m. today, I would buy Chevron right here. We also get Pfizer's results. 3.7% yield has been tarnished by its association with the remarkably unsustainable set of COVID vaccines and the earnings that come from them. I think there's much more to Pfizer than that. Wall Street seems to disagree with me. Now, United Parcel reports, I'm concerned that they might have some sort of union issues this year. FedEx doesn't, so I'd rather own FedEx if you think e-commerce will re-accelerate. After the close, we hear from Intel's arch-rival AMD. I believe there are many problems that plagued Intel, including a glut of basic chips. But one of Intel's problems is really that AMD's got a great portfolio now, and they keep taking market share from Intel, and yes, eating their lunch. Wednesday morning, T-Mobile reports, and I think we're going to see that once again, they're taking share from AT&T and Verizon. The stock's a horse, and it will not be denied. If a stock traffic jam isn't enough at 2 o'clock Wednesday, we get the results of the Fed Open Market Committee meeting. Now, there's a universal consensus that they'll raise interest rates by 1/4 point. Anything more than that will frighten us. A decision not to raise rates at all might show too much weakness. 1/4 point with a statement that they'll remain vigilant will allow the bulls to party on. Now, after the close, we hear from Meta. Yes, the artist formerly known as Facebook. This company's a black box. Has Mark Zuckerberg been spending too much time in the unprofitable metaverse? Is Reels taking share from TikTok? Has Instagram reaccelerated? All I know is the stock's had a real run, and while we own it for the charitable trust, we're not pounding the table on this one. Not here. No way, no how. It just went from 90 in November to 151 today. Thursday's one of the 4 hardest days of the year, and they're all hard for the same reason. It's when we get earnings reports from Apple, from Amazon, from Alphabet, and a host of other important companies all in one session. The day starts off with Eli Lilly, which should give you some insight into how it's expecting big demand for its diabetes drug once the FDA approves it as a weight loss treatment. I think that their drug, Mounjaro, could be the greatest selling drug of all time, which is why it's such a big position for our investment club. When Honeywell reports in the morning, I expect a clean story about aerospace and slightly difficult story about software and climate controls. We own it for the Chapel Trust. We like the optionality of what Honeywell can do with its huge balance sheet. Come on, Darius, damn check. Put up some good numbers and make some changes. After the close is when big tech tries to kill me. There's Apple. I think we can all concede that they won't be able to meet the estimates because of weakness in China. So the call will be about the future. Unfortunately, Apple's Apple's future may not be big enough after this remarkable recent run. This stock has just gone from 125 at the beginning of the month to 145 now. I always say own it, don't trade it. But I'm sure the fast money will start Apple ahead. They're going to short the stock ahead of the quarter. They're going to try to make a few bucks. Let them go make a few bucks. I like the stock. Then there's Amazon, which we own for the Chapel Trust since forever. Can't recommend it here, though, because the company has way too many people on its payroll after overhiring during the pandemic, and the e-commerce business is slowing. Why not sell it? Because if Amazon does the right thing, as sad as it might be, and let 100,000 workers go, you heard that, 100,000, this stock will soar. Alphabet's been taking some medicine, but it too needs to get smaller. It's not in the interest of the company, by the way, to show strength when the government's investigating for antitrust violations. But if it's a good quarter, they'll certainly tell us. I'm not sure what to make of Starbucks here, given that the run has been so powerful. But anything they say about China that's positive should allow the stock to keep ramping higher, which is why the Chapel Trust has held it, and we still tell members of the investing club we like it. Ford reports, too. It's got the lineup of electric vehicles that it can crow about, but with a big caveat. The new price cuts from Tesla may compromise the Mach-E pricing. The F-150 has reservations for the entire year, though, so I'm not so worried. Here's an oddball one. Deckers. They're the parent of Uggs. Now, when you go to a Bed Bath & Beyond, which you know is struggling, you do see a huge amount of Uggs product. Bed Bath can't pay its bills. We know that. I don't even want to think where that inventory is going to go, but I do know this. It will hurt the stock of Deckers. And if those are not enough reports for you, we also are hitting the road for our 20th back-to-school tour at the University of Miami. Yes, it's back. It's going to be a big day for everyone. That's universally known as the U. Finally, Friday, we get to the end of the onerous week when we hear from Regeneron. And I think they'll talk about new drugs that are quite added to the bottom line. Will it matter, though? You can take your cue from the action in Pfizer and Merck and Bristol Myers, which we hear from on Thursday. I like Regeneron. But there are more important things than earnings on Friday. We have the Labor Department's non-farm payroll report. What a week. And the presumption will be that the Fed has some idea about those numbers before its Wednesday meeting. Who knows? If wage inflation is very strong, the quarter-point move will be criticized. If it's weaker, we'll be hearing all about that hard landing again. But if they sneak in a 50-basis-point hike, holy cow, it would be totally unexpected and could repeal this recent rally, even if, well, let's just say they try to telegraph it ahead of time. Bottom line, after the tsunami of earnings and the Wednesday Fed meeting and then the Friday labor report, this coming hellacious week will finally be over. Wish me luck, because I'm going to need it. Let's go to George in Pennsylvania. George.
How you doing, Jim? It's been 2 years since the meme stock mania kicked off. So my question for you, if I could have your blessing on a small speculative position on AMC.
All right, well, look, AMC, you're absolutely right. It's been 2 years in that GameStop period. AMC, Adam Aaron's store on AMC. I'll bless a small speculative position, because, and I only do it for one reason, because you called it speculative, because that's what it is, because the movie theater business right now is not doing well. Michael in South Carolina. Michael.
Hey, Jim, thanks for taking my call. It's been really fun being a member of the club this latest market.
Thank you.
Jim, one of my winners from last year had a very bad week, plunging almost 9% on Wednesday. I'd like to hear your thoughts on NextEra Energy following their recent revenue miss and concerns about the FCC complaints connected to Florida Power and Light.
Oh, look, next year is a good company. I'm not going to go there. I think that this is just a great long-term situation. We've liked it before. It's got growth. Utilities with growth are hard to find. Sam in Colorado. Sam.
Hello?
Sam, you're up.
Hi, Jim. Listen.
Sam.
We've got to talk about one of the biggest corporate head scratchers that I've heard of in the last year. we've got this fantastic company, this stable cash flow generating machine that we know is Adobe. And they made this $20 billion acquisition of an unprofitable tech company, Sigma. $20 billion. I can't buy into Adobe knowing that they've got this gigantic, $20 billion dilution. And, it concerns me because this is exactly what happened to a company like GE back in the 90s.
Sam, I got to tell you, although I think that Adobe, I don't want to put it with GG's, had real problems, but I didn't like the acquisition either. And so I understand your trepidation. It bothers me. I wish they hadn't done it. I know they've put the deck out and they've explained it, but for me, no. And I really do like the company that is Adobe. All right, after the tsunami of earnings and the Wednesday Fed meeting and then the Friday labor report, this hellacious week will at last be over. But we got to go through it first. Hey, on Mad Money tonight, it's a battle royale on Mad. I'm tackling the technicals and comparing the Warren Buffett-backed stocks to the hot stocks of the NASDAQ to see who comes out on top. Plus, is Rockwell Automation rocking? I'm going to sit down with the CEO for an exclusive. And the housing market has been shaky, but I don't know. What does it mean for the demand in lumber? I'm going to sit down with the CEO of Weyerhaeuser, fresh off earnings. And yes, next week, the back-to-school tour returns. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.